家。
Are you going to panic sell at the worst possible time, or are you going to add to your positions when everybody else is selling? Hi, this is David Modell looking at the markets. Whatever you do, please don't let financial headlines scare you out of perfectly good companies, perfectly good stocks. All right, now don't do something just because I or anybody else in a video said that they recommend it. Okay, you have to make your own decisions, do your own due diligence. Don't just listen to somebody in a video. But I don't expect the market to crash anytime soon, in January or February, really. I can't predict the future. I don't know what's going to happen. Of course, it could crash. But I don't think that these headlines are reasons to freak out and panic sell your best stocks. This is from MarketWatch. Blame the Fed. Tech stocks get off to worst start since 2008. Yeah, okay, it's been 3 trading days so far in 2022. The worst start is just 3 days. If you're an investor, what do you care about 3 days? You shouldn't. You're thinking about the long term. You're in this for long-term gains, or even as a swing trader, if you're just going to hold for a few weeks, few months. What happens in 3 days doesn't mean that's just going to keep on going down. Yeah, I know, there was a tech wreck. Tech stocks got hammered, but they went up a lot last year, up until about November, December. And so it's normal, it's healthy for stocks and sectors that have gone up a lot to retrace or cough up some of those gains. It's normal. It doesn't mean there's something wrong with the companies. So what's the big headline? Federal Reserve puts wheels in motion for balance sheet reduction. Yeah, the FOMC minutes came out. The meeting minutes came out. But it's the same news that we knew all along. There's a threat, not a promise, but a possibility that the Federal Reserve might start to wind down their balance sheet, to reduce their monthly billions and billions of dollars of asset purchases. You know how every month the Federal Reserve purchases tens of billions of dollars worth of mortgage-backed securities and government bonds? That floods the banking system with liquidity, with cash, basically, and that makes the stock market happy. Okay, they may start to reduce that, and they may start to increase government bond yields. They might or they might not. This is something that hasn't happened yet. The Federal Reserve can find any excuse they want to not to reduce their asset purchases and not to hike bond yields or interest rates. For example, if the inflation rate goes down even for a month or two, the Fed could use that as an excuse not to hike interest rates. If the economy gets worse or even seems to get a little bit worse, the Fed can use that as an excuse not to raise interest rates and not to slow down their asset purchases every month. We don't know what's going to happen. Or they may hike interest rates just once this year by 1/4 of a point. Whoop-de-doo. 25 basis points, 1/4 of a percentage. Not a huge deal. Or they may do it twice or 3 times, or they might not do it at all. So you can sit around and worry about what might happen but hasn't happened yet, and there's a decent possibility that it might not happen at all. And you can panic sell perfectly good companies, or you could be level-headed and sensible and take stock of your stocks, and you could say, hey, what's down and what can I invest in? What can I buy shares of or more shares of if I already have some? Yes, NASDAQ got hammered. Okay, it's only been 3 days this year so far. No need to judge how the whole year is going to go. I'm looking at this heat map from finviz.com. Technology stocks went down. Google, Microsoft, Apple, Facebook, Meta, whatever the heck he's calling it nowadays, okay? NVIDIA, AMD, Salesforce. Those are great companies. AMD, NVIDIA, Salesforce, Microsoft, Apple, Google, great companies, huge companies. Also some financials, JP Morgan, Morgan Stanley, down. Tesla is down. If you like the electric vehicle stocks, Tesla's the most famous one by far. Some real estate stocks went down. Some healthcare stocks went down. Are these problems or are they opportunities? Some of the stocks I recommended, I don't recommend stocks, but I drew attention to them on Saturday. Some of them went down quite a bit. Electromechanica, Solo, Fiverr, Salesforce, Fuel Cell. These are companies I still like. ChargePoint, Coursera, Square, still companies that I like. I don't dislike these companies because the stock price went down. They're the same companies as they were a few days ago. All right? So unless there's some new company-specific bad news on these companies, I like them more now, or I like the stocks more now, I should say. And also look at some of the stocks, perhaps, that didn't do well last year, like the worst performing Dow stocks of 2021. These are Dow Jones stocks, huge companies, some of the biggest companies on the planet. Disney, Verizon, Boeing, Merck, Visa, Walmart. How could you have a problem with Walmart? If it went down, great. 3M, Dow. These are giant companies. So if you're looking for companies to invest in or just to swing trade even for a few months perhaps, this is possibly a time to consider getting in. Don't do it because I told you to do it. I'm not telling you what to do. And don't do it because, maybe a famous person on television told you to do it, okay? You want to do things because you believe in the companies and the price went down to a price point that you find to be compelling, all right? And don't judge a whole year by a few days, and don't get shaken out by big headlines in 50-point bold font. Bold font is not a reason for you to be scared, okay? So stay sensible, stay safe, make your own decisions. I don't think there's any reason to panic right now, this month or even next month. Hey, we'll see how it goes. Thanks a lot for watching and listening. I will talk to you again soon.